Dumelang. Let us do 3.3, where we required to complete the extract of the financing activities as it will appear in the cash flow statement for the year ended 29th of February 2024. And I need you to recall what financing activities are about. They're just about how the business is financed. Now we need finance to run the operations and to invest. And this financing can be acquired from the owners of capital, which we refer to as shareholders, through the sale of shares. When they de-invest from us, we will buy back those shares. And when we buy back those shares as the company, it will result in a cash outflow. Or if we don't get this from equity financing, we will get it from our liabilities or debt financing, which is from loans and proceeds from loans. And that's what's actually missing here. So we will have proceeds from loans as well as repayments of the loan. Note that the repayment of the loan will result in a cash outflow, the same with the repurchase of shares. Now, they've already put zero for repurchase of shares. From what I can predict here, there is no repurchase. We did not buy back any shares from the shareholders. Now, we have done most of this, and I've already highlighted things that are important here. And obviously, when we look at the loans, we will look at that loan amount which relates to Ariela Bank, and more information about loans will be given to you below. So you are told that interest on the loan is capitalized. When interest is capitalized, it basically means that interest is added to the capital amount, and that means your interest paid will be the same as your interest expense. And you have to use Berry, and I'll show you Berry shortly in order to calculate this interest. Point number two says that a new loan for 1,450,000 was taken out in order to help fund the expansion. So that 1,450,000 will qualify as proceeds from loans, and that will be a cash inflow. It's 1,450,000 rand, which is a new loan that we took. All right. And then they say we paid 68,000 rand each month to cover the monthly repayments. I will highlight that to cover monthly repayments and the interest on the loan. You will use this to calculate your interest. That is because when interest is capitalized, your loan repayments will be excluding the interest paid. So we need to determine how much interest was paid. Please check out the previous video as to how I calculated it. But just to recap, I used Berry to calculate our interest expense. As I have specified, Berry stands for balance at beginning of year. You will have additional loan, which was given to us as 1,450,000. You will also have the repayments. These repayments must be annual. They were given to you monthly, so you will take that and times it by 12. This will give you 816,000 rand. You put it in brackets. Then you will have your interest on loan or your interest expense. At the end, you will have end of year balance. According to the loan, At the beginning of the year, we had loan with Ariel Bank amounting to 2,800,000. And the loan at the end of the year was 3,686,000. You will have noticed that according to this, we've got that you will use reverse operations to calculate this over here by taking 3,686,000 and 816,000 minus 1,450,000 minus 2,800,000. This will give you an interest on loan amounting to 252,000. Now, to recalculate your repayments, you have to take the repayments amounting to 816,000 and subtract interest on loan. So it will be 816,000 subtract interest on loan. This is because you will subtract interest twice if you don't do this, meaning you will have paid it twice, which is wrong because when interest is capitalized, the interest portion is shown as paid separately on the face of the cash flow statement. So under financing, you only put in the capital repayments as the interest repayments have already been shown under operating activities as interest paid. Let's determine the capital repayment towards this loan. It will be 564,000 Rand. Okay, I started with the loan. You could have started with the sale of shares, but when it comes to the sale of shares, I need to be looking at my ordinary share capital. However, ordinary share capital here was not given to us, except that they gave us in point number 1 that on the 1st of March 2023, the company had issued 80% of their authorized shares and raised around 21 million in ordinary share capital. Those will be your ordinary share capital at the beginning of the year, but I will prove it to you that it was that much. I am simply going to take this. I need you to understand that when you take your retained income and you add it with your ordinary share capital, it will give you ordinary share capital, or it will give you your shareholders' equity. So this will be your ordinary share capital. When you add it with retained, it will give you your shareholders' equity. Therefore, to get shareholders' equity, you will simply add your retained income with ordinary share capital. It makes sense that for you to get your ordinary share capital, you will take your shareholders' equity of 31,500,000 for 2024 and minus 6,600,000. This will give you 24 million rand. And let's see how much we'll get as shareholders. As ordinary share capital for 2023, you will take 26,400,000 minus 5,400,000. As stated above, it will give us ordinary share capital amounting to 21 million. Remember, they told us here that there were no shares that were repurchased during the year. So it makes sense that your ordinary share capital is going up because we only issued shares and that resulted in a cash inflow. Why will it result in a cash inflow? That is because your financing, equity financing, has increased to 24,000 Rand. From 21,000, 21 million. I need to check this. 31,500, 123, minus 6,600,000. That gives me 24,900,000. And this has to do with the shares that were purchased. They'll give us 3,900,000. To get the movement, you will take 3,900,000, add 1,450,000, minus 564,000, and this will give us 4,786,000, which will represent your cash inflow from financing activities. Just to recap, financing is about the sale of shares, the repurchase of shares. So shares, financing from equity participants. So it's us selling shares, we're getting capital. If we buy shares from another company, That one is not financing, it's investing because we are investing our money in another company. Here it is shareholders investing their money with us. So they are financing us, in return, they get shares. And then we've got loans. When we get a new loan or repay the loan, the repayment of the loan will result in a cash outflow. Okay, let's move on to the next part. We need to calculate total dividends that were paid as it will appear in the cash flow statement on the cash flow statement for the year ending 29th of February 2024. Please note that to calculate dividends paid, you will take interim for this year, current year interim, CY stands for current year interim plus final for last year, or you can say it's written as shareholders for dividends in trade and other payables. Those are final dividends, but we need final dividends for the previous year. Let's see what we've got. Shareholders for dividends represents final dividends. This will be, the 805 will be current year final dividends. The 560 will be the previous year final dividends. So when we calculate dividends paid, it will be those previous year's final dividends of 560,000. You will add them with this year's interim. But for this year, when it comes to dividends, you were told that total dividends, and that will be your interim and final for this year, paid and declared for the year, amounted to this. So they gave us interim plus final for this year. So interim plus final for this year will amount to 805,000 rand. So what you need to do is to minus this year's final. Actually, I'm lying here. Your interim and final for this year will amount to 1,405,000. It will amount to 1,405,000. So this will be this year's final. 1,405,000 will be this year's final plus this year's interim dividends. If you take your total dividends for this year and you minus the final for this year, the final for this year is written as shareholders for dividends, which is that 805,000. This 1,405,000 represents this year's interim plus this year's final. So if you take that 1,405,000 and you minus 805,000, which is the final for this year, you will be left with this year's interim. 1,405,000 subtract 805,000. It'll give you 600,000, which is this year's interim. When you add it with last year's final, you will get total dividends paid as they will be shown in the statement of cash flow, and that will amount to 1,160,000. This will be your dividends paid as it will be shown in the cash flow statement or the statement of cash flow for the year ending the 29th of February 2024. I hope all your questions were answered. If you would like to join the lessons, please check the descriptions. And I hope to see you soon. Hustle.